Welcome to The Green Rush, a podcast about the business of cannabis. On a weekly basis, hosts Ann Donahoe and Louis Goldberg talk with the CEOs, politicians, and cultural icons driving the cannabis industry forward. This is episode 39, where Louis and Ann speak with Danny Moses, who was firmly at the center of the financial meltdown back in 2007-2008 as a trader working for Steve Eisman. If you don't know who Danny is, you should. He's one of the smartest guys from Wall Street, and over the past few years, he's been going long on the cannabis sector, just as he went short on the 2007 housing market. This chat is a doozy. Get your Investorpedia open. Now don't sit back, lean forward. Now, on to the conversation with Danny Moses. Danny, thanks for joining us.
It's my pleasure. Thanks for having me.
I can personally tell you, I've been really looking forward to this conversation for a while. And before we get into our chat, I just wanted to let everybody listening know that they should really focus and listen to Danny's podcast, Bale Street, where he and his friend Ira Judelson talk to some of the biggest celebrities in out there. And I can tell you, as an old school Knicks fan from like the 1980s, listening to you shoot the shit with Charles Oakley was great. And the conversation around the Fair Punishment Project and bail reform and promise, and there are going to be links to all those in the show notes, all really, really resonated with me.
Great.
So before we jump into cannabis, let's go back a decade. The defining moment for anyone who's in their 30s or older was the financial crisis that really kind of broke in 2007. And while the economy seemed to be firing on all cylinders then, and similarly, it seemed to be firing on all cylinders now, back in 2007, all hell broke loose. The real estate bubble burst, and millions of Americans lost their homes, their jobs, and for many of them, they lost their lives. And at the center of this collapse was the mortgage-backed security, and all those crazy derivative products. You know, you've heard the names, CDOs, CMS, synthetics, etc. They go on and on. And while the vast majority of Americans lost at least a piece of their American dream, a handful of really smart guys saw this bubble well before it burst. And we're talking to one of them. You made a ton of money betting against the big banks. Not against America per se, but against the banks who had basically been defrauding us all. And as one of these guys, Danny, you worked with a guy named Steve Eisman, and you guys shorted credit default swaps. Now, our listeners may not know what a CDS is or CDO is, and since this is a pot show, I'm not going to ask you to explain them. We'll just put links to Investopedia in there. But I remember 2007 like it was yesterday. It scared the shit out of me. And you were at the center of this whirlwind. How scared were you? I mean, you knew exactly what was going on in the financial world. I mean, were you ready to jump?
Yeah, we were. It was pretty nerve-wracking towards the end. Prior to that, we just were excited that, we had a call on housing. The housing prices would go down. It looked like it was happening. For a while, there was a disconnect between home prices and what was actually happening in these derivatives. And just to take a step back, so you actually buy protection on credit default swaps to make it even a little bit more confusing. So the effect would be shorting a mortgage-backed security or a pool of mortgage-backed securities. And it really came down to Moody's and S&P, and this is, I won't go into it too much because it's in the book and the movie, but they did not have a model which actually showed home prices ever going down. So, I mean, you think about cannabis, even cannabis companies now are projecting on cannabis prices coming down, right? Just on a state-by-state basis. At least there's some logic in that math. There was no logic that home prices would ever not go down. So that was the core of the thesis, and everything around that, the builders, the banks, the mortgages themselves, I mean, anybody, building supply companies would be impacted by that. So that was kind of that. The scariest moment was certainly when, having worked at a hedge fund, we were working at a hedge fund that was owned by Morgan Stanley, and realizing that we may not even be able to be paid, and or our livelihood was also at stake because Morgan Stanley themselves, the bank that we technically worked for or as a subsidiary of, was actually long the stuff that we were short. And we did all we could to try to tell Morgan Stanley that the people that on a certain floor at Morgan Stanley were putting them at risk. They really wanted to hear none of it. So that was the scariest moment, was realizing that. And then, in the book and in the movie, it portrays us on the steps of St. Patrick's Cathedral, And shortly after the Lehman collapse, the markets were going haywire. I was sitting at my desk and I started to realize this is not just about making money anymore. This is about the livelihood. And as we stood on the steps of St. Patrick's Cathedral, and in the movie, it has me asking to go eat at a restaurant or something in Nobu, which was never the case. I just want that out there. I'm not really a foodie. Was watching people walk by. Literally, everything felt like it was in slow motion, and we almost felt sorry for everybody, including ourselves, that what was going on was going to have an impact, just like you just said, on everyone. So that was a scary, surreal moment. Yeah, that's basically it. And I wouldn't say we bet against the banks per se, because keep in mind, it was the people at the banks that had set up these desks that were also profiting, some of them, from being short. But the products that they were selling, obviously they were making a lot of money on, and eventually they had to pay the piper. And so we did short banks. I'm just saying we didn't target the banks per se. We targeted the.
Well, the reason I phrased it that way is, you could say you were betting against the housing market, and if you bet against the housing market, you're betting against both American people and the American economy. I didn't think you were doing that. I think that you realized that all these synthetic products were basically built on sand, and you saw it before anybody else did, and you just figured it out. Somebody had to make a profit on the other side of the trade. Why not you?
Right, and I think we weren't as early. We were early on housing, but as far as putting on the trade, the actual credit default swap trade, Michael Burry, who portrayed by Christian Bale in the movie, he was very early, to the point where if we had been that early, we'd have been taken out of that trade before we were ever going to be able to make money off of it. So I would say, like in anything in life, timing is everything. We truly had lucky timing in the sense of, yes, we put the right product on, we were able to execute what we wanted to, but it really started working from day one. And as an equity hedge fund moving into credit default swaps, you better be right, because you're going to get your fund taken away from you if you're wrong. So that was fortunate in terms of timing on that, for sure.
So in the movie and in the book, you're a central character in Michael Lewis's book, and I just rewatched The Big Short and got pissed off all over again. So how accurate, you said your character was a foodie, but beyond that, how accurate was Rafe Spall's portrayal of you?
Well, I would say that from the book to the movie, Vincent Daniel and I's character were somewhat intertwined and put into Vinny's character. Jeremy Strong played him in the movie, and Jeremy Strong came in the office to shadow Vinny and a couple of the other actors around. Rafe never really did that. Rafe and I met down in New Orleans on set, went to dinner with our wives, and he quickly said to me, he says, "Hey, what's it like to be Danny Moses?" And that was his background. I go, "Well, maybe we should wife swap, and we could find out each other's business." Now his wife is a famous French actress. She's a James Bond girl, Elise Dutoit, lovely lady. And she turned to me, she goes, "I'm 7 months pregnant. I don't think you'd enjoy it," or something like funny, really funny. And so Rafe and I got along great. That was kind of broke the ice there. But, as far as the way that Adam McKay portrayed my character, it wasn't as intense. I mean, in the book, I'm the one that says, "How you going to fuck me?" To the broker, not Vinny. But in the movie, I'm like, "Where are we going to go eat?" In the movie, I'm chased by an alligator. That obviously never really happened. We did knock on doors of homes that were empty. We did go through neighborhoods and things like that. So we did do that. But I think I was much more intense in real life on the desk itself than I was portrayed in the movie. But all in all, I'm not upset. It's fine. And I don't know why they did that testicle thing at the beginning. I asked Adam McKay, I go, "You had to throw that in?" He goes, "Married, no testicle thing." I'm like, "Great, thanks, Adam." So, no.
I mean, every good movie needs a testicle joke, right?
Exactly. Right. Why not?
So going back to that moment, was there something that was there this one moment in time where you're like, "Oh shit, this is it. We're headed to a Great Depression"? Because I remember mine. We used to work with an interbroker dealer, credit default swaps, and he was in the middle of a lawsuit, and I had a reporter, the debt reporter for the Wall Street Journal, sitting in my office, and this guy was taking him through. My client was taking this reporter through all of the dominoes that were about to fall, and as the client's taking the reporter through this, we're watching on the TV the Congress vote for the first bailout bill, and it failed, and we just stopped. And we're like, "Fuck, we are so screwed." Did you have one of those moments while you were on the desk?
I think the moment I kind of there was a lot of moments along the way, but one of them, we were short Lehman for a long time. And we felt that Lehman was at the epicenter of everything that was wrong. And what was weird about it was I had friends that worked at Lehman. They may have been on the high yield desk, et cetera. They were completely separated. We're actually short the markets, we're short mortgages, and they did not understand what Lehman themselves was involving themselves in on the corporate level. And so there was a Sunday in September 2008, prior to Lehman filing bankruptcy, that I was on the fields for one of my son's sporting events or something. And I saw a friend of mine who worked at Lehman. And while we were both standing there, news came out across the wire that Lehman was in need of funds and was potentially either going to go bankrupt or be shut. And that was the moment, kind of when I actually was out of the office, away from the ticker, away from day to day, that I realized if Lehman truly goes under, what are the repercussions? And we didn't think anybody really understood that. So I would say it was the Sunday in September that Lehman kind of announced that they were in need of financing or looking to be sold. And we came into work that next Monday. I know the markets were down huge. I think they were down on second day, and I think the government stepped in, and I don't have everything in front of me, but government stepped in and did something and started one of their programs, that they had did, the TARP and the TALF and so forth. So that was the moment I think that I felt, again, because I was off the desk that day, that I actually was able to have a whole different vantage point. There was no stocks open, nothing was moving. When the stocks are opening and closing and they're trading during the day, you get an immediate feedback loop, right? When you don't have that and something happens on a Sunday and you have a full day to digest that information, a lot of things run through your mind about how this is all going to play out. And I actually started to feel bad and think about my friends that worked at Lehman for 15, 20 years that had millions of dollars in Lehman stock. I don't think anyone around the country is going to cry for them, but I realized that they were completely innocent bystanders in this, just having worked at the firm, that was at the epicenter of this. So it was a wild moment for sure.
So following the near total financial collapse in 2007 and when Barack Obama came in and the Congress kind of got their heads out of their asses and passed stuff like the Volcker Rule, and that'll be in the show notes as well, and Dodd-Frank, it seemed like Wall Street had their insatiable greed being reined in. Seeing what's happening now with the orange piece of shit in the White House, and what's going on on Wall Street now. Where's your level of stress about the financial situation, the financial system? I mean, I'm sorry.
Well, the banks themselves are pretty healthy here. Just any type of capital ratio that you would look at. Where you run into problems is derivatives. When you get into derivatives, no matter what it is, whether it's maybe it'll happen in Bitcoin. It could happen in something else, but when it's not a zero-sum game, right? Someone is taking leverage and exposing themselves, whether they make money or lose. You won't know that for a while. So it's always in derivatives. And in that case, at this moment at least, I don't think there's anything out there that really scares me. There are products like levered ETFs and things like that are out there that we've seen in the last 3 to 4 years, fits and starts where some of them blow up. It happened in the energy markets a couple years ago. You've seen it happen in some of the debt markets when you had the debt bubble kind of implode slightly when the Fed started raising rates, when they talked about taper tantrum, that whole thing, right? You saw glimpses of it, but you've yet to see full scale. That's where I think you're going to end up having something, is in the ETF market. And there have been times where the SEC has been asking various ETF firms to look through and examine what's the risk. And ETFs in general, to me, pose a risk just because I think they provide a false sense of security to people in the marketplace. And it really creates correlation of one, right? Everything's kind of correlated. If you look at the ETFs, they all hold 90% of the stocks are the exact same. You think you're diversified, but you're really not. And then there's these fixed income ETFs, which I think have the ultimate problem. So people that wanted yield, if you're a retail investor, you're owning, some of these BlackRock ETFs. I'm not singling them out. It just happens to be they own some of them. You may own the J&K, which is the high yield ETF, because you're looking for yield. And that's fine, except there's a mismatch of duration. In the old days, you would buy a bond and hold it to duration. If you're an insurance company or pension fund, these are literally minute by minute in and out of bond funds, right? So it doesn't really match. The few times that we've seen a rush for the exits, you've seen these products underperform massively. And so consumers need to realize that they can lose in principal, just like you can in a bond, quickly while you're getting this yield. And so I think that's an issue also. As far as Dodd-Frank and Volcker rule being pulled back and repealed, there will be a consequence to it. They're allowing now, I think, more prop trading will come back a little bit. Some of these larger banks on Wall Street can now own pieces of hedge funds, private equity more than they could, even though they may have been doing it.
Where is Glass-Steagall when we need it?
Right, exactly. So I'm somewhere in between. I do think some of the things were archaic in the sense of small community banks that had to adhere to these compliance issues that the larger banks really have and the smaller ones don't. That did create an unnecessary cost, in my opinion, because these weren't the banks. These are the mom and pop banks, right? These are the ones in your local community banks, and they had to really deal with a lot of compliance costs. And I'm glad to see that there is some common sense there being applied. So there were some things that went overboard. That being said, Wall Street has a knack for, if you give them an inch, right, they're going to take it. They're going to take a foot, and they will hang themselves on rope. There's no question. It could be in oil. You will see if the markets ever do sell off on a continued basis, or a certain part of the market, whether it's energy, materials, whatever, you will see repercussions. And I don't know at this point with what's going on in Congress if there would even be a hearing right now if J.P. Morgan or Goldman Sachs took call it a $700 million loss on something related, like some type of derivative product. So kind of remains to be seen. It is setting up that way, though, that you are going to have something. You always do normally, but it is going to allow the potential for hazardous things to occur, I would say. That was a long-winded answer to your question, but.
That's so
No, but you know what?
Danny.
It's
Thanks
needed.
for that.
Yeah. Yep.
But right now, like Lewis said earlier, this is a cannabis podcast, so I'd like to pivot to that.
Yep.
Can you talk about how you got involved in this industry?
Sure. I kind of always had my eye on it slightly over the last several years, but my thought process on cannabis at the time was, hey, everybody knows someone who went out to Colorado 5 or 6 years ago, started growing cannabis, owned a piece of a dispensary, sold it. They're doing okay, but not great. And that's really the extent of cannabis. And I realized, obviously, that wasn't the case. And it was easy to ignore it because it's illegal. The banking system can't touch it. The stocks that are out there, we can get into that, that trade in the U.S., a lot of them have very poor governance, et cetera. So I was introduced to Mitch Berukowitz, who runs Merida Capital, about a year and a half ago, who had been a Wall Street lawyer. He had worked at Market Access, and then he worked at Pally, and he worked at Unwinding Pally at the time, Pally Capital. And in the midst of all that, I guess he wrote a couple of license applications for various states, Minnesota, Connecticut, back in kind of 2010, 2011, 2012, and then realized that he himself should be looking into the industry, and why is he outsourcing his own stock when he can do it himself? So he started Merida, I believe, in 2014, kind of 15, raised Fund 1. I met him in early 2017.
And are you in any of his funds, or did you just invest alongside of him?
No, I'm actually in his funds. I'm in both Fund 1 and Fund 2. He's currently in Tranche 3 of Fund 2. And what's really interesting is Mitch's approach is to invest in the ancillary businesses. And I know you guys know some of these companies because you work with them, but whether it's Kush bottles, packaging, which I've done side by side, investments with him, that would be one of them. GrowGen, which you guys know very well, and a couple other lab testing companies, Steep Hill, a couple product companies. But basically his thought was, let's do the lighting, let's do the packaging, let's do all this. And that's been the way and I totally agree with that thought process. And what's really interesting is if you get into these companies in the early stages, maybe not at inception, but soon after, and we can talk about this as well, there's a real opportunity to help not just shape the culture of the company itself. And I'm not doing that. I would give that over to Mitch. But you can also set the governance up for the board. You can help them set up structure. And the best part, or the worst part for the company, is the best part for the investor is the terms that you can get, that you can ask for and receive with some of these companies are really unlike anything you would ever see that also has the positive macro backdrop going on. So whether it's warrants, whether it's a very high yielding note, whatever it might be, you can really write your own ticket there. So Mitch has been great in this. He's built up a portfolio. I don't know how many companies now, between 12 and 14 companies, I think, between the two funds, maybe even a bit more at this point, and starting to branch out into some of the growers, et cetera. And so it's really been interesting to watch along the way and getting a look at his investments and getting a look at the people running the investments, some great, some not so great. You kind of get a much better vantage point than just looking at a stock price and trying to read a 10Q or a 10K, because there's stuff happening every moment right now in the industry, as you guys know.
So you've called cannabis the big long. I mean, you were in on the short, and now you're in on the long. But why is it called the big long?
That came up to me like spur of the moment at a conference, but I realized, there's not many people that were willing, as you pointed out earlier, to take a bet against the housing market for various reasons. People did not want to believe it at the time because they knew that not just everyone owns a home, not everyone, but 60% of people own homes, and that it would have an impact on their lives. The big long, in the sense of, I think people want to choose to ignore cannabis for now because it's illegal. There's a lot of ways you can just say, hey, I'm not going to deal with it. And these companies are crappy, and if there's a time, I'll do it. I think the time is now to kind of take the risk. And I say that I'm not growing it. Obviously, I would never take that type of risk myself. But as an investor, I think we're in the second or third inning here of what is, if it's a 9-inning game, it may go longer. But I really don't believe there's going to be a fourth, fifth, sixth, or seventh inning. So I think we're kind of setting the stages right now. So the big long, in my opinion, is going to be occurring over the next, I think, 6 to 12 months, if not even sooner. And whether it's the midterm elections that potentially provide meaningful catalysts coming up, whatever it might be, or the banking system, or a descheduling of the drug, whatever it might be, I think that the risk reward here is fantastic. And I also think you need to have long duration. These are not stocks that you really want to trade in and out of on a continuous basis. Obviously, there's some volatility in Canada. Some of the names there do move a lot quickly, and so you need to react to those. But I think you need to pick your stocks, pick your winners in each kind of category that I just talked about. The packaging, the suppliers, the lighting, whatever it might be. And I think private equity, not having to deal with the day-to-day movement in stocks that can really create and force confusion and make you make bad moves and decisions, is the best way to do it, and kind of get a diversified portfolio in that regard. So I think it's a great 3 to 5 year trade, and I think if you're in the right names, I think there's tons of money to be made.
All right, so I wasn't going to ask you, but I got to ask you: are there any names that you want to shout out? If I'm, because this is all retail, right? I mean, you're not seeing real institutions getting in on the money. So are there any?
Sure. No, so I like to pick various names, but Liberty Health Sciences, I think, is a really good name. I like their assets that they're building currently in the U.S. They now froze the terms on their deal with Apria, so Apria will not be selling those shares. So that kind of gives you a little bit of room. At least you don't have to worry about that for the next 18 months and stay on 20% of the company, I believe. I do like Kush Bottles. I'm not just pushing your guys' product there, but I think Kush Bottles is a great company. I think they're doing the right things, and the growth is there. Ianthus, I think, is a very interesting company. I love the markets, Florida, that they're in, and they're expanding, I think, to more states going forward. I like the way that they think about the business.
Also a KCSA client.
What's that? Sorry.
It's also one of our clients.
Okay. And you have to be vertically integrated. To own just a grower makes no sense, right? You have to own the whole channel distribution. So you need to be vertically integrated, own the distribution, own the dispensary, et cetera. So I think, and again, 99% of these companies, well, maybe all of them, I've actually met the management of. And, I'll always take a small stake in a company. And if I plan on taking a bigger stake, but, between the small and the bigger stake, I want to go meet with the company and get a better idea for what they're really trying to do. So those are some of them. And then, just to pitch Mitch, I mean, his fund Merida, I think, is ripe. And they do own Kush Bottles in their portfolio. So they own 2 public companies. That's one of them. GrowGen's the other one, GRWG. And I think that's the best way to play it. In my opinion, getting into some of these smaller companies and then having the ability to monetize it either through the public markets later or M&A, which I think will be occurring. And all of this, I think, is predicated upon the descheduling or rescheduling of the drug, which should happen, and or some type of state law that's passed that Trump said he would sign, but I don't think he even knows what he says. So
the states, the States Act or whatever that's called.
So,
do you have any thoughts on when that you think that'll happen? We kind of ask all of our guests that.
I mean,
we've heard everything from 2 months to 10 years.
Right. Listen, there's with, I think 90-something% of people support medical marijuana, 62 or 63% support rec marijuana. That's a lot of constituents. So anyone looking to pick up votes, I think. So the midterm election, I think you'll get a lot of positive noise around cannabis. I actually think that that getting into these stocks before the midterm election, the right ones, is key. I think we may launch into the next inning, from the second to the third rather quickly after the midterm elections. Whether they actually pass that state bank law or the state laws, kind of like they did for sports gambling, kind of invoking the 10th Amendment rights.
Yep.
Then you would have state banks being set up that were protected. Because right now, I don't know, I'm sure you guys are aware of this, everyone listening may not know, the FDIC banks by law cannot do business in cannabis because it's a Schedule I drug, cannabis itself, and it would be deemed to be drug trafficking and money laundering and all these other laws that come into place. It's the equivalent to dealing in heroin for banks. So the other thing that I would touch on is the hypocrisy that exists within some of these banks. I mean, you have Wells Fargo shutting down people's accounts that they think are involved in any type of cannabis business, yet they're the advisor on Scotts Miracle-Gro's, $600 million acquisition, or Constellation Brands, which made the huge investment in Canada. The advisors on that were Bank of America, JP Morgan. So there's so much hypocrisy. We all know how Wall Street works, right? Where there's real money to be made, they'll go grab it. When there's nickels and dimes and they can make an excuse to show that they're following the letter of the law, they'll start closing people's accounts. So that will quickly change if states, I think, get the protection that they should have. So,
do you think there are any lessons to be learned from the housing market? I mean, we're talking all about risk here, right? And the fact that banks can't participate right now, but are there any parallels you can draw from what you learned in 2006, 7, and 8 with what you're seeing now? I mean, they're two totally different industries. One is, the foundation of our economy. The other is, turning a black market into a thriving market. Are there any correlations there, or am I just
No, there are correlations. I think there's a couple of correlations. One is that I think housing became a fad. It wasn't just about the numbers. It was that everyone we knew was buying a home, selling a home, owning 2 homes, buying a home, fixing it, selling it, owning 3 homes on 3 different mortgages. It actually became an in vogue thing to do. I think one of the dangers cannabis could be, hey, I'm just going to buy any stock I see because I believe that this cannabis thing is real and it's picking up steam. Well, biggest difference in that is the institutions were long housing, the big institutions. And in cannabis, to your point earlier, it's just, mom and pop retail people. The real institutions aren't in these stocks yet. So the parallel would be that the retail people that are looking to buy cannabis stocks right now are throwing caution to the wind and buying anything cannabis, the same way that everybody was not just buying housing stocks, but housing itself was being bought because that was the cool thing to do. So that's one similarity. And
so for a retail investor who is not, somebody who knows how to really read a filing, and you're right, there are just a tremendous amount of money sloshing around on E-Trade and Ameritrade and all those other platforms. If you were to sit down with, I don't know, my teenage son who is 15, who doesn't know how to read a Q or a K, how would you tell him to analyze these companies? Because he actually buys pot stocks himself, and he listens to me, and I'll help him understand because I understand the industry. But if you're explaining it, what makes for a good investment? How do you explain this to the average retail investor?
Well, I think kind of the Peter Lynch style of investing. I think you need to try it. I'm just kidding. But no, I think you need to really break it down. And I mean, it is you really do need to read the Qs and the Ks, and you do really need to listen to a conference call that one of these companies have had, listen to a couple, listen to how management thinks about their business, look at how they pay themselves. Look at
from paying themselves. If they're paying themselves in equity more than cash, it means that they really believe in the company. If they're paying themselves in cash more than equity, they probably have less of a long-term view of the value of the company, right?
Well, that goes back to controlling the board and the ability to issue 1 billion shares, literally, which I see in some of these penny stocks. So some will claim that they'll use that as an excuse. They'll say, well, I'm not taking much salary because we're trying to get profitable, but I'm just paying myself in shares. And then they don't include their compensation in their in their expense items, which is a joke because that's a big thing, obviously not just in cannabis but in tech in general. This non-cash comp that doesn't get included, it gets adjusted out. So I would be aware of any type of adjustments. I would be wary of shares that are able to be issued but not yet outstanding. I would look at the pattern of, some of these guys and girls sell shares. That's the way that they make money. And I don't have a problem with that, but you do have to look, there's limits to what you really want to see. You also want to see, I read the backgrounds of all the executives, look where they came from, look where they've been. Do they have a record, God forbid, of some kind? I'm serious. It's not hard. You can spend an hour and just topically start to look at various things about a company and get a real feel for the culture of the company, kind of how it's organized, et cetera. Some of the best companies, not even cannabis, are the ones that are underfollowed. And Wall Street has a knack, obviously, 62 analysts that cover Amazon, 74 that cover IBM, and so forth. Sometimes there's 3 analysts that cover a particular company. Those are always, to me, whether it could be in real estate, it could be in cannabis, it could be in technology. Those provide the best opportunity because that means that you actually have to do your own work and the work is not done for you. I always say the worst thing you can do, I always equate it to horse racing. When you walk into a track and you don't look at the program first, but you look at the odds board, and there's 8 horses on the board, and the 2 horses even money, and the 9 horses 22-1, or the 8 horses 22-1, and you haven't looked yet in the program, and you take the lazy way out, your brain's going to tell you to go bet on the 2 horse at even money, right? Because the public must know, they must know something, and a lot of that has to. I look at the portfolio investing like that. You want to actually go find the 22-1 horse that nobody seems to understand, and there maybe that there's a better reason that they don't. So maybe there's a product application within cannabis. Like let's use Patches, for example, right? Which is also, Mitch has a portfolio, Mana is a company in its portfolio. I think Patches, which are now less than 1% of the market for cannabis delivery, are going to dominate in terms of growth rate. I want to find a patch company. I don't know if there is one that's public. You guys would probably know that before I would. And then I'm going to start with that, and then I'm going to work my way backwards, like I just mentioned, right? I found the category that I want. How's the management? How's the corporate structure, et cetera? And what are people projecting as far as growth rate? And the other thing going on within cannabis that I'm wary of, but I understand it, is all the mergers going on. So all the M&A, and people are forced to obviously use their stock as currency, right? Because they're just, again, the banking system is not providing capital. There's no loans being provided against assets, things like that. So I get that. You got to really look and see what they're really giving up. Then you got to look at lockup restrictions. When are these shares coming to market? There's not a lot of coverage of these stocks. So you really need to do your homework before you just start blindly going in to these stocks. So I would say I know that's another long-winded answer, but there's really not one recipe that works to how you would want to. But, I think becoming comfortable with the sector of cannabis itself, comfortable with the product itself, or whatever that may be, they may be doing within it. Look at the board, look at the governance, look at the pay grade, everything. So another long answer to that, but I hope that answers your question.
Well, I have a question before we get to Canada, because we want to talk Canada too. What's your day like? What do you talk about, reading all these filings and doing your research there, but from a media standpoint, who do you think is reporting on? There's a couple of reporters who cover it, but largely it's ignored by the CNBCs of the world and the Fox businesses of the world and the Wall Street Journal. So do you have any favorite reporters that you're tracking, or outlets that seem to get it more than others?
Obviously, I follow Alan Brockstein at 420. Obviously, Tom Angel, who I think does a great job. I follow him on Twitter.
He's very fun on Twitter. Yes.
Yeah. So I do use Twitter a lot for that. The Alan's app, New Cannabis Ventures, I think that's his app, correct?
Yeah, it's awesome.
Yeah, it's great. That pops up all the time, and it's always timely, and there's always more to dig when he puts something out. There's always more to dig, and I love the way that he thinks about the business. So those are kind of the 2 big ones that I use. Bloomberg has articles from time to time. Forbes obviously has them. Tom writes some of those, himself. But you're right. But there again is the opportunity. The minute that the Wall Street Journal starts putting out cannabis articles every day, I'm going to worry that the stocks may be, a bit rich.
Mm.
So, but no, it's a total, what's the word I'm looking for? Ad hoc, I guess, right now is in terms of trying to find all this information, but it's out there.
It really sounds like the same type of research that you did and Dr. Berry did around CDS and the mortgage market. You guys just dug in. You have to do the same. You have to do the work. There's no easy way to identify what to invest in. You got to do the work.
CDOs should have been a Schedule I drug. Should have been banned before they ever kind of existed. Not cannabis, but yes, you really have to do the work and dig.
So now let's talk about Canada. They have these companies have these enormous valuations. Some think they're insane. Other people think that they're priced right. Some think they're undervalued. Where do you stand on the Canadian market?
So what's really interesting is I can totally understand the richness of the Canadian stocks from a scarcity value, at least up until 6 months ago. And the fact that they were using their stocks as currency and making other acquisitions of other expensive companies, I totally understood as well. What's really interesting now is the U.S. companies, U.S. business-focused companies, which are listing in Canada as their primary exchange that only have U.S. businesses. So now up in Canada, there's a massive bifurcation, in my opinion, because you're looking at Canadian companies that they may sell not just in Canada, they certainly don't sell in the US, but they may sell around the world, very expensive. Then you look at the newly listed Canadian companies that only do business in the US, and they're much cheaper on a relative basis on any metric that you would look at. Those may be expensive in and of themselves, whether there's, growers that are in Florida, I just saw one that it's going to IPO, I think, next week up in Canada, whatever it might be. There's really no comparison. So now I think you're going to start to see the gap tighten. And I think the Canadian companies themselves, the ones that are focused on Canada, are moving into a show me state, so to speak, on their numbers. And I think you're starting to see some of these stocks getting hit on what were unrealistic numbers or projections.
So are you shorting any of these companies?
I am not short any Canadian cannabis company right now, nor in the US actually. And that's not because it's hard to get a borrow on a Canadian listed security. For me, I don't have an account set up to do that. I could do that if I wanted to. I can short U.S. stocks for sure. I bought puts from time. I don't want to name the names of some of the Canadian companies that I have because if they're listed in the U.S. and I can buy puts on them, I do. I'm such a believer on the macro basis on this trade from a sector. It's hard to want to go short right now, and I don't have enough on the long side in the public markets to validate going short something. But I do think it is lining up well. I think to go long U.S. focused companies listed in Canada versus Canadian focused companies that are also listed in Canada. I think that's a great setup trade. It's probably something that I will be looking at to change, set up an account to do that. I just haven't as of yet.
So U.S. companies have to go to Canada if they want to list now, right? And there are Canadian companies that are now listing down here. So
I think those ADR listings, those aren't true. Their primary exchange is still in Toronto, but yes.
Well, no. Like Kronos is here, and
Kronos is listed here now. Yeah,
Canopy Growth is down here. You see these companies now. These Canadian companies who don't have any feet in the U.S. listing on the New York Stock Exchange and NASDAQ, and the American companies to raise capital have to go to the Canadian Stock Exchange, which is not it's not even the Toronto Exchange. It's the secondary market, the third market. Is this sustainable, or what's going to happen here?
Well, as soon as the U.S. Exchanges realize what they're missing out on completely, I think that there's a listings issue. There's a certain type of requirement. Obviously, goes back again to financials, the way your board is set up, governance, audited financial statements. So there's a reason that some U.S. companies, I'm not saying all, can't even list in the U.S. yet, or they're on bulletin board and they do want to uplist, they have to meet certain type of requirements, pretty much the same thing. But listen, I think as soon as the drug is rescheduled or descheduled or I think even the state protection, things will move quickly. It's just, the SEC doesn't even know what to do right now. They're confused. They're calling around broker dealers. I've heard just saying, hey, what are you doing in this space? We just want to know what you're doing. They call around to investors. Hey, we see you participated in this. What are you guys doing in this space? And I don't think they're calling to question that they're going to throw a citation or fine them. I think it's more they're really trying to get a grip. So I think it's in real time happening right now. But unless the SEC comes out and blesses these things, the exchanges themselves aren't really going to make a move towards aggressively marketing towards listing, at least primary listing in the U.S. right now. So it's not worth it yet to them. Like I said before, as soon as these companies become bigger and bigger and they can't ignore it, I think it'll all happen at one time. So, but to your point, you are seeing bits and pieces start to happen, and it's just few and far between right now.
So we're going to take a pivot to social justice issues. Your podcast, Bail Street, is really cool. Again, we'll provide a link in the show notes. You talk with celebrities, athletes, everyone who's been through the works of the criminal justice system, and reforming the system seems to be something that's very core to who you are. Can you talk a little bit about that, and what do you see as the overlap with the cannabis industry?
Well, the overlap with cannabis is that in the fight to change the scheduling for the drug, a lot of Democrats are also asking that you go back and adjudicate a lot of these crimes that have to do with marijuana over the last whatever year. So if someone's serving a sentence in California for 20 years for possession, that conviction should be overturned and thrown out. And that's where those meet, is justice reform and cannabis meet there, because it was a racist policy that started in late 60s, early 70s under Nixon, right? And the whole basis for it was racist, cannabis, making it a Schedule I drug, in my opinion, and I think that's the opinion of many. So if you go back to that, if you go back to that and then move fast forward, why not go back and say, okay, let's right a wrong? It never should have been a Schedule I drug. And in doing that, why, if it wasn't a Schedule I drug at the time, or shouldn't have been enforced that way, these prison sentences should be commuted. So that was kind of the whole basis. When we started Bail Street, it was never truly intended to be about justice reform and bail reform. It's just where the show has gone, because it's an exciting topic is the wrong word. It's a hot topic, what I should say. So we happen to have, we've had Mitch on our show, obviously. We had Michael Lewis on our show. We didn't talk about criminal reform there. And then it turned into Ira's clients. Ira's a bail bondsman to the stars. So Ira has bailed out everyone you can think of that you've ever read about in the paper was Ira's bail. And so he can't really talk about things in real time as they're happening, because they're his clients, and some of the stuff like Conor McGregor, the news you saw that just came out yesterday, he had known weeks ago that he wasn't going to serve a day in prison. He was going to do community service.
We're recording this on July 27th, by the way.
July 27th, exactly. The Conor McGregor news was on the 26th. So it's just kind of gone that way, and I think it's a topic that's not going to go away. If you listen to what Ira says about it, obviously his livelihood is bail, but he's in complete agreement that there's a level of bail reform that needs to come in, and there's been investors that are looking at various companies as a way to invest in it. Promise is one of the companies started by Jay-Z and his people. There's some venture capital funds in that company as well that are basically working with local counties to track a possible felon or whoever gets incarcerated. If they can get out on bail, they can't meet the $500 bail. Why not just let them out with an ankle bracelet so they can go find a job and move on with their life? Why should they spend the rest of their life in prison potentially for shoplifting for their family, or something minor? Because that is what ends up happening. And then part of our show, we talked about Rikers Island, which there's obviously a huge movement to shut it down, and how corrupt it is and how bad it is. And so it's kind of moved that way, and I like it. So originally the show was, it could be insider traders, right? It could be just the topic of the day, like Tesla is always a hot topic, and I talk about that one a lot, obviously, as a short. Or it could be Irish people. So it just happens that we've gotten this blend now, and it seems to be working. So I'm sure we're gonna stay on that topic, I would bet, at least every other show. So
it's great. I mean, I listen to it now regularly, and there is a lot of overlap in the issues of social justice for the cannabis industry and the people of color problem that the industry faces, and what's going on in bail. So your show is all about bail. Is there anything you want to confess to? I mean, is that how you got to know Ira?
I've never needed Ira for that phone call. I need him for other phone calls, but not for getting out of jail. But I would recommend that everyone puts Ira's phone number in their phone. If you want to get out in like a couple hours as opposed to 3 or 4 days, we joked on the show that Harvey Weinstein spent 8 minutes, I think, in the court total. He didn't spend a day in prison, which is a joke. Ugh. He will eventually. But when he went through the system, like that's the way the system is set up, right? It curries favor towards wealthy people or people that are somewhat connected. So that's another problem. We don't have to go into that here, but it is really, really, really interesting. It's a business like anything else, and it's who you know. So, and a lot of these kids who get thrown in Rikers or get put in jail for minor offenses, their lives are ruined. They don't get the opportunity to defend themselves. It's impossible to get some type of representation when you're in prison, especially when you don't have resources and you're a teenager or you're 20 years old, or it really can thwart your life. And so everyone knows that there's something needs to be done. And so I'm hoping that the midterm elections will provide a lot of that. And, I hope that cannabis goes along with that. I mean, I think bail reform and justice reform are more important than cannabis, right? Let's forget about that for a second. But at the same time, I think both could be done simultaneously, at least to a degree, together. So that'd be great to see.
Agreed. We actually haven't talked about your relationship with the plant, and obviously you haven't needed to be bailed out, but are you a consumer?
Not really. Well, we don't have to talk about that, but every once in a while, sure. You want to make sure when you're doing you're investigating the companies that you want to invest in, you got to, like Peter Lynch said, you got to try out the products, so to speak. But I do think that there is a great medical application for it. From the wellness side of things, if you ask me what's healthier for you, to drink 3 vodkas or put a patch on, the answer is to put a patch on. Any doctor in the right mind would tell you that. So I'm not saying if I had to choose which one I would choose, but you can assume that I know about the patch companies themselves. But no,
I can admit to saying I would much prefer to consume cannabis than to drink a beer or even a really good glass of wine. It's just better for you.
Yeah. And I think that my whole interest actually started from interest in the opioid epidemic. Thankfully, no one's been impacted in my life that's close to me. I know people that have. And the thought process of why is a dentist prescribing 20 opioid pills as opposed to 3 days of medical cannabis. One is very addictive, one is less addictive. And so those are the type things where I thought, logically speaking, it's proven from the wellness side, from the economic side, those two are irrefutable what cannabis can do for people. And I think also people that listen to your show know, but CBD is the non-psychoactive, obviously, ingredient in cannabis. And people still had a problem with that at the time until they really took the time to understand what it is, what it comes from, that it's naturally occurring in the body. And so people that have this negative stigma, I was worried for a while that, hey, I have teenage boys. I don't want them to think that I'm, quote, pot dad or something like that. I just wanted to look at this thing logically from the business perspective, from the wellness perspective. And to me, like I said, that goes back to the big, long argument. Both your health and your wealth, I guess you could say, can be helped by cannabis. And so, the horse is out of the barn, and it's not coming back in. And there may be fits and starts and bumps along the way legally. Maybe a company gets raided here and there that we think is perfectly fine, but they weren't. That might happen. Who knows? But people that are ignoring it now, from the health side of things, I think are ignorant. And then also, if they're in the market and they're buying stocks in the market in general, I think they need to be looking at cannabis stocks in general also. So, look what's going on in the states and the counties where cannabis is legal. Alcohol sales have dropped in those areas. Tobacco sales have dropped in those areas, right? You guys have that data. You guys have seen that before. So even if I'm long a tobacco company or long a beverage company that sells alcohol, even if I don't want to go long cannabis, I better understand as a portfolio manager analyst what is going on in the sector. What are the trends going on? And when they do that, I think what they'll find is, hold on a second. Forget about selling my beverage company or tobacco company. I need to own this cannabis company. So I think that's, I just moved it off from do I use cannabis to what I would do. But But that's
That was a very nice pivot. So
yeah, it was a nice pivot. Yeah.
well done. So we took a lot of your time, and we really appreciate it. But we are at that point in the show where we ask all of our guests to do puff puff pass. This is where you're supposed to kind of do rapid fire, 2 things that you love about the cannabis industry, and the 1 thing that you absolutely hate. So I know you don't smoke, but puff puff pass.
I love the wellness aspect of the drug itself. I think it's underutilized and misunderstood. From a wellness perspective, people need to read, get on board, and start using cannabis to improve their health where necessary, and to just relax in general. 2, I think the other puff would be the economic benefit that it's going to provide for local communities and states and counties is irrefutable. So I think people need to recognize that. And my pass is the horrifying corporate governance on some of these companies, none which we have mentioned today on this podcast. But again, look and see, from a governance perspective, is the CEO also the chairman? Is he also the CFO? How many shares are being issued? Look at the quarterly, look at the 10Qs, look at the K. Even if they're unaudited financials, take a look and do your own work. So I would say navigate well. So I don't know if that was
That's perfect.
Pass, but that's kind of the 3 things that come to mind. So
that was awesome. So thank you so much again to our guest, Danny Moses of Moses Ventures. We will put all the links in the show notes. And man, thank you so much for doing this. Really,
thank you guys.
Really appreciate it.
You guys are doing great work. I love your show. Thanks, guys.
Thank you. Take care, Danny.
Thanks again to our guest, Danny Moses of Moses Ventures. The links to his company, to his podcast, and to all of those criminal justice reform programs are in the show notes. Please really check them out. They're important. And thank you for listening. If you haven't already, please hit the subscribe button and give us a rating and a review. It really helps others find us. If you have a comment or a question, we would love to hear from you. Check us out on social media, on Twitter and Instagram at KCSA_cannabis, or you can drop us an email at greenrush@kcsa.com. That's one take, Shay. One take.